Yeah, and great to catch up. Just give us your take, I guess, on your week at MIPIM and I guess what your sense was of the market and the market sentiment.
Well, to be honest, the tone was very different from the usual kind of MIPIM we used to have back in the days. But the good thing is we didn't have some kind of mismatch in discussions or full denial from some people that we had back at Expo, where I would say the sentiment was really different when you were talking from I would say one person working in one geography from the other one. I would say that, if we had just to say a word, it would be standstill. So people are watching carefully what's happening, obviously waiting for the first mover, for the first, I would say, the first big firm to set a tone to I would say the next step of the market, and mostly to the core buyers, because as of now I would say large deal, core deals, no one has seen, I would say, one that has taken into account, I would say, the kind of new metrics since it all shifted, I would say, last summer. But there's also a lot of positive things. Obviously, all the alternative debt providers were having a big smile on La Croisette, and I think that they could have a smile because their moment is coming, and notably in terms of refinancing. And I would say the motto of those people walking around you was, back in the days, it was hard to compete with German or French or the bank mostly from the continent were offering very good pricing at high ratios. And as of now, it's basically either you have a very low ratio with, I would say, 5 to 6% kind of all in versus a nice, I would say, LTV ratio. But obviously, it's going to cost you more, up to, I would say, 10%. But at the end of the day, when you do the math on your business plans, it sounds attractive to talk to those people. And especially a lot of refinancing is going to happen in the next coming months, quarters. So I think, at the end of the day, it will be a time where mostly in the continent, whereas the alternative lenders didn't have such a good reputation as of now, their premises is going to be really interesting to run some deal. I would say so. The first kind of positive theme was, the change in debt and the alternative lenders coming to help. Second was obviously, as always, I would say ESG, and notably, I would specify the EPC's issues. ESG has been a subject for a long time now, but I think more than ever now, with, I would say, all the taxonomy from the European Union, notably, and also in the UK, all the regulation that is to come. EPC is something central, and this is something that is regulated, and you can't lie with potential kind of labels that you just made up, or just a couple of money you've paid to an advisor, and you have a nice bespoke kind of label. EPCs, I would say, do not lie, and this is something that investors are assessing really methodically, and there's a strong green discipline on the portfolios now. So I think it's going to come more than ever, and a lot of I would say pricing will be diluted in relation to those EPCs. And the third one was also a discussion we touch mostly nationally, but it's coming more and more. And I think whatever the kind of political party that is in power within the city or within the country, urban zoning are getting tighter and tighter, notably in relation to the social kind of claims or the demonstration we're seeing all around. It's not specificity to France or to the UK as of now. The cities are trying to preserve the mixity of the people and to have a social touch. So I would say building permitting is getting harder and harder to get, and even some cities, notably in France, are pushing on existing building to have some mixity, which is kind of destroying value and which is creating some kind of panic on the asset. So I think this is kind of new, and we have to adapt. So I think the really positive thing as well is managers and real estate people are really flexible. So I was really happy to hear that most of the, I would say, kind of historic managers were kind of rebalancing their large office footprints to life science, senior housing, potentially social or intermediate housing, and trying to get a flavor, of what's next. Obviously, a lot of people are trying to go on the recycling play and turning the old stock into either new, either something else. But once again, the urban zoning regulations are really painful, and it's not so easy, I would say, to convert your old office stock into something alternative when I would say the regulation is not there, or you have to wait maybe 5 to 7 years to negotiate with the city hall just to turn this. So obviously, a lot of clouds among us, but I think we'll find a way to do something else, to do something better, and to manage our asset as best as we can do.
Yeah, I thought it was really interesting just to see the sort of difference between those people who were more optimistic and those who were, very pessimistic. But yeah, some interesting aspects there. Thanks very much, Guillaume.